Good morning, everyone. Today is Tuesday, February 17th, and today we're going to go over TSPY. All right, this is the TappAlpha fund. It's been doing well. People talk about it all the time. I'm actually trying to look into a good zero DTE product that's based on the S&P, the SPY, the S&P index, etc. So why not, take a look at what looks to be the winner in the space right now. But before that, let's take a look at Bitcoin, BTC, crypto, whatever. It's down. Okay, shocker. We got a note here. What does that say? Harvard trims Bitcoin ETF holdings by 21%, builds 87 million. Oh, low blow, Harvard, low blow. But is that a good move by them? Who the heck knows? But either way, maybe that's why. Obviously, the big drop there from 68 to 67. Yeah. So thanks a lot, Harvard. You did us dirty. All right. Let's go to the TappAlpha website. So if you click on, or if you go to TappAlphaFunds.com, again, I'm not going to lie, man. I haven't looked at these. I just haven't had the time. And to be honest, I should not have ignored these for this long. I probably should have done a review. So, but we're going to learn together what they offer. So if you click ETFs, you can see they have TSPY and then TDAC. And then over here, I just noticed this, they have the T2, T-squared, whatever, lift series offers light leverage versions of TSPY and TDAC designed to deliver 30% more exposure to the growth plus income strategies investors already trust. So, so I guess due to the success of these two, they're basically making another one on steroids. I mean, that's how I'm reading that. But I'm not here to review these funds. I'm here to review the old school TSPY. All right. So I'm going to click on TSPY and we're going to go from there. All right. So again, why am I reviewing TSPY personally? Again, I was looking, I think we were doing a review the other day and I was talking about some of the zero DTE funds because I've been wanting to learn how to do zero DTE options. But right now it's not the best time. I really, I don't want to rush it. So long story short, I don't trade the SPY currently. I've been trading the NASDAQ and the Russell indexes. But if I look at just the SPY and trading the SPY, by the way, please confirm the audio is working. I didn't even think about that. I know it's early, back to work today, back to the stock market being open. It's not looking good. It's red, really red, actually. So again, lately it's just been blah, man. It's not too exciting on the Monday morning or Tuesday morning. It's like, come on, man. When's this market going to be open green? But anyway, TappAlpha SPY Growth in Daily Income ETF seeks current income while maintaining prospects for capital appreciation. The fund's secondary investment objective is to seek exposure to the performance of the S&P 500. So there is a fact sheet. So we always want to first look at the fact sheet because, again, that usually has pictures. It's to the point, right? Because ain't nobody got time to read all this jazz, right? So I always say, fact sheet fact sheet should have it all. But you gotta hope that when they make changes, they update the fact sheet. Because some of these funds, I don't know if they do. All right, TSPY ETF, looks like a decent fact sheet right off the bat. A fintech-powered growth and income ETF designed to capture the growth potential of the S&P with an optimized daily covered call. See, zero DTE. So basically, they sell calls every day on the S&P 500. Here's the benchmark participation. So they participate in the S&P 500 via the SPY. All right, so I guess they I don't know if they own the SPY outright and then they just trade it. We'll have to take a look at the holdings. Number 2, sells daily 0 TD. Okay, so we know that. Enhanced return potential, seeks to capture returns that longer dated covered call strategies. May sacrifice. Okay. Aims to reduce volatility and account for risk with execution. All right. Fund objective. I'm not going to read that again. Here you go. Designed for growth and income in a dynamic market. Bear market, outperforms. Flat market, outperforms. Moderate bull, outperforms. Bull rally, underperforms. I mean, I like it. It doesn't get more straightforward than that. And, you know, that absolutely makes sense because, again, they're doing daily covered calls. So if the market goes down, you know, they're going to go down with it, but they're going to collect the premium as it goes down. You know, they're going to profit probably all of the premium. So that's why they're saying outperforms. In the flat market, right, the idea is that the S&P, the SPY won't move. However, you know, if they sell calls out of the money, then they should expire worthless and profit most, if not all, of that premium. Now, in the moderate bull market, again, the idea here is it's going to go up, but very little, you know, ideally under the covered call strike, right? Which would mean that, yes, again, they will profit their, you know, most of the premium and capture, again, the majority, if not all of the upside from that, you know, little baby bull run. So that's why they would outperform there. And then here, of course, they're saying they would underperform because, you know, if it's a true bull rally, it's flying through your strikes. See ya, gone. You know, you got to pay for that loss, that covered call that got blown through. You know, you're going to be capped on that upside. But, you know, we all know how that works. So there's nothing to be said there. But again, the way they show this and explain, I like this. I like that right off the bat. Because to a newbie, this is just so perfect. Self-explanatory, straight to the freaking point. You know, no one's going to look at words and read words. All right, historically, cover call. Historically, cover call strategies have outperformed their underlying securities. Okay, so that's just kind of like stating what it's showing the picture. Growth, income generation, maximize theta decay, reduce time risk, flexibility. Let's read what flexibility says. As market conditions change, the advisor will adjust its position daily to realign with the underlying security's price trajectory. This approach offers the best chance to participate in both the underlying security's performance and the simultaneous harvesting of, okay. I mean, again, if they have flexibility to do different things, obviously that's a good thing. I need more coffee, man. I hit snooze a lot today. It was not good, you know, too many snoozes. So the struggle bus is real today. Welcome back. It's like a super Monday today. So let's read this too. Maximize stated time decay. By writing call options at the beginning of each trading day that expire the same day, the advisor capitalizes on the rapid time decay of the options. This ensures that investors harness the most value from the risk-appropriate options. Data is a measure of the time. So I guess this is just saying since they're doing 0 DTE, which by the way means they open the trade in the morning and it expires the same day. So if you look at the theta, right, so you're going to collect a premium up front, and then that premium, the theta part of the premium, it's going to decay very fast because it's only for that day. So as time goes, you know, a ticking, you're going to be earning that premium over that time frame. So that's what they're talking about there. The reduced time risk. Yeah, the short-term expiration, that is 1 day of the option, minimizes prolonged market exposure. This is what I like. Again, what we've seen, I'm assuming they're true 0 DTE, by the way, not 1 DTE, because I don't want no 1 DTE. I want 0 DTE. I want the overnight, the after hours exposure. That's what I want. All right. It's what I want. I say remember that. All right. The advisor seeks to reduce the chance for the underlying security to make an unfavorable shift in the money options position, meaning the current. All right, whatever. Disclosures. Okay, nobody's reading that. At least I'm not. And then snapshot. I missed this at the top. They trade on the NASDAQ. What else? They launched on August of 24. Wow, they are old. They are old. And that's even better because you can see a full picture of how they've been doing. How they doing? All right, distribution rate 14%. Is that enough to satisfy you? It should be. In this day and age, I know people want 50%, 100% yield, but again, I'm trying to, myself, I'm looking for, again, I don't, the only thing that pays me a dividend distribution, whatever we're calling it, doesn't matter, same crap to me, right? It's going to be STRC at the moment. I actually don't own any high yield ETF in my taxable brokerage at the moment, right? So what I'm looking for is something that can stay capital flat while maintaining a respectable yield. I know I'm not going to get my 40%, my greedy ass 40%. So I am going to accept, I can accept this 14% if over the long term, the capital looks to be, I'll say, at least flat. All right. Not on a decline. Because again, I want to build up slowly the account. Obviously I could just invest in the SPY, but I won't do that because, I want income. I still do want the income. This is going to, make me have to make more money on the options that I'm trading, build up a higher yield there. But at least, I have money, there's cash just sitting in a cash bucket in the brokerage, but why have it sit there? Maybe slowly build up a position in TSPY, for example, right? Which, by the way, I meant to check what their margin requirements are. Give me 1 second. Okay, so they are 30% margin maintenance. I just checked that. I don't know. Again, that's not bad. That's actually really good. So, and that's important to me because although I'm not necessarily using margin, I like to have the most margin available to me. All right. All right. So management fee here, total expense ratio here, whatever, 0.77%. Okay. That's interesting too, because they are 0.22% below the competition. Competition being SDTY, XDTE, WDTE, right? That's their competition. That's who they're coming after. That's who they need to beat. And I believe they are. I mean, we could check it if I remember at the end. But yeah. So anyway, let's continue the review. Let me know in the comments real quick. By the way, good morning. Thank you all for being here at this crack of dawn Tuesday. Back to work. Some of us are just hanging out. But do you own TSPY, and what are your thoughts? I'm going to go through some comments. Double D was here first, and then Brother, then A1. Okay, good morning, good morning. Then Mike Co, the other Mike Co, I guess, right? Wolf, LA, Bruce. Who else we got? Steel, good to see you. Good to see you. Steel's an OG, man. Who else we got? A lot of these people are OGs. Backyard Prospector. Brian Pillman. All right, Brian Pillman's here. All right, so what else are we doing? Well, we're going to keep going through. Market price. The cost of this is $24.87 to buy the fund. The NAV, whatever, close enough. Net assets, the assets under management, whatever you want to call it, $242 million. All right, so tiny compared to maybe some of the others, but they're probably around this actually. The competition is probably around the similar range there, but I'm just thinking like compared to like the oldies and the misties, yeah, obviously there is a lot of money out there, tons of money, especially like if the average people saw the performance of some of these funds and what they do. They probably buy them. I would click play, but it doesn't work. Like, you're not going to hear sounds, so there's no point. All right. Obviously, you can go to the website yourself and clickety-doo-dah. All right. What do we got here? The FinTech powered ETF designed to capture S&P. All right. We kind of know that. And then here, yeah, this is all from the fact sheet. All right. And there's C. Katara, you know, Katara, maybe. I'm not sure if I said it right. You've seen him on various, you know, YouTube's people interviewing him. He seems like a really good dude. He seems to really have, you know, motivation and care for the product, which is good. I've never interviewed him. But again, I'm kind of on an interview vacation, if you may. So number of holdings. Okay, 3 shares outstanding. All right, so let's keep going. Per distributions. All right, so let's look at the distributions. So first, we're going to start at the bottom. I don't know if they have all the history. So I just want to look 29, 27, 29, 29, 29, 27, 28, 28, 29, 30. So look at this, dividend growth. You see that? Their first payment, 29. I think that was the first. Their last payment, 30. Hell yeah. Yeah. But what's the problem here? Well, some may call it a problem. They pay once a month. So if you're like stuck on this weekly trend, you know, what are you going to do? Right. But again, your bills come once a month. So really, what's the big deal? I know it's nice to see weekly payments. Is it an absolute necessity? It is not. It's awesome to get paid weekly. But if you get paid monthly, obviously that would suffice to pay your bills if you're living off of these dividends. I'm going to click the latest 19A1 notice and just see how much is return of capital. Let's see, cumulative distribution for the fiscal year. Estimated return of cap. Okay, 100%. I didn't see any wording. Maybe it's in the prospectus of how much, or if their goal is to pay return of capital. But all right, I own. Okay, so here Wolf says he owns TSPY in 2 accounts. 2 accounts. How many accounts you got, Wolf? And he's happy with it. Okay, he made Wolf. You made the Wolf happy, so you're good. Brother AB, what's going on? Do you need the income, or don't you don't think you'd be able to sell something that has grown in value? Do you need the income, or don't think you'd be able? Well, yeah, I'm not playing the. If you're asking about investing in growth funds, just sell them for income. No, I can't play that game. I'm not a stock picker. I'm an options trader. That's it. You know, I have the growth. I always say, we talked about my 401k not that long ago. That's my growth. So when all's said and done, when I'm truly, truly retired, what am I going to do is going to be a little different, because I'm going to move, you know, essentially all of the money to one account. Because the reason I don't invest in growth funds at all here in this account is because I have my 401k, the prison balance, as we say. Someone got mad at me on X for saying that, but you know, the 401k is locked up till I'm old, gray, or dead, and that's in growth stocks. So again, that's enough growth for me. This I'm using for the now. This account is to help, you know, pay the bills now. This account is to help us live now. It's not to make us rich. It's just to help us survive, right? You know, family of 4, 1 income. So it's doing right. Obviously, we're taking hits lately due to some of the market, you know, going on. But yeah, income, 100% income focus. This account is all income. All right. I don't know if I answered your question, but let me keep going. On the bullet points was 100% ROC. 5. Oh my goodness. That's too much work. I don't know why you would want to do that. Maybe you need to. I don't know. Redfish, I'm looking at this fund. Yo, 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 let me speak on this. Good morning from Wisconsin, 5-0 in the house. Maybe it's an office day for him. Maybe he could relax. I don't know. All right, so I downloaded. Well, I didn't have to hit download. Here are the holdings. All right, so here's what they do. They have the SPY. All right, they got lots of shares. Lots of shares. It says shares/contracts, but there's no options here. So obviously, all of this represents shares. They have 355,000 shares of the SPY. And what I wanted to see here is I did not want to see the option, and I don't see the option, which is good. So that's kind of telling me they're doing true zero DTE, because when you do true zero DTE, and assuming they're updating their holdings, then you're not going to see a freaking options trade. Although this says as of February 13th. When was that? Yeah, so as of the Friday, it doesn't say what time. All right, let's just assume it's after the market closed on the Friday, February 13th. It's not there, right? So it's just the SPY, the cash, and then the government bond, whatever. So it's, again, it looks to be true zero DTE. So yes, I like that. What else we got here? Here's some documentation, prospectus, summary prospectus. We did the fact sheet. Yeah, all that mishmash. Annual statement, is it return of capital? Probably a lot of it, because, and even if it's not, they should actually, no, they're trading the SPY, so they don't get the 1260, what is it, 1265, 1260 treatment. Yeah, I'm not going to go through the annual financial statement, but maybe you guys know, is it mostly return of capital from what you've seen? Okay, let's go to the prospectus real quick. All right, so this is as of July of last year. All right, so let's see what they got. Again, I tried highlighting. For some reason, it's off. It's not aligned, so I had to stop. This is the only thing I highlighted, so we're just gonna have to talk through it. But yeah, still, 0.77%. Does it matter 0.77 versus 0.99? I don't know. It depends, I guess, how much money you have. If you don't have a lot of money in there, it's probably not much of a difference. But it's still, it's the thought that counts, right? Okay, so it's just, this is for TSPY and TDAC, because don't forget they do have TDAC, which is for the NASDAQ. And the reason I'm not looking at TDAC is I'm already doing options on the Qs for the NASDAQ. So I don't need additional exposure there. I'm just looking for, personally, I'm looking for exposure under, the S&P. All right, let's keep going. All right, so just a little index there. All right, again, investment objective. Again, the first thing they state is seek current income. Then the second thing is capital appreciation, just FYI. Always have to keep an eye on that. Wolf says it is 1256 as far as I know. Yeah, but they trade the SPY. So unless ETFs have special rules, which again, they probably do, because us schleps that do options ourselves, we have to do it on the freaking, the actual index, which is unaffordable. Portfolio turnover, the fund pays transaction cost. Okay, we don't care about that. Principal investment strategies. All right, I'm just going to look for the important stuff here. Use of a call option strategy. See when I highlight it, what happens? It's just, I don't know why it does that. So if you're listening, see Katara, please fix this. I'll do another review if you fix the document. I mean, if I download it in Word, I could probably just fix it, but I don't, I'm doing can't be swapping back and forth. You got to use the Mac. All right, what are we doing here? The combining the long position is fine. All right, so the strategy is a daily covered call option strategy that sells. Can you guys see this? I think it's pretty good font, right? It sells out of the money call options with 0 days to expire. See, there you go. There it is. I'm good now. All right, known as daily call. All right, I guess that's a thing. Daily call. I don't like that name. It's kind of lame. Hey, but whatever. Daily call. Daily call op. It's probably just for the prospectus. Daily call options having 0 days to expiration are also known as 0 DTE. That's the name we like. Yeah. All right. In general, an options is a contract that gives. We know that. All right. And it goes down here. I see other tickers. This may include, but are not limited to, call options on the SPY. SPX. Okay, so SPX is the one that qualifies for 1256, and so does XSP. So I guess they do trade both. I'm wondering why right now, like it's all SPY. Wouldn't they prefer SPX? I don't know. All right, let's see. The fund will receive premium income. Okay, yes, we know that. All right, I need coffee. It's a lot of words, right? Oh, man. Speaking of work, Double D is leaving for work. So have a good day, Double D. He's always working, man. He's a working man. Go check out his channel, guys. What's good about TSPY and TDAC? They pay different weeks. Again, they pay once a month. So I think what Redfish is saying, they pay at a different time than others that pay monthly. I think that's what he's saying. Are they generating enough profit from trading to cover the distribution? Good question. We'll get into that. Right below, it says expiration date. Oh, no. All right, I guess I'll find that in a second. Where does it say that? All right, anyway, where are we? However, Spire. Okay, so the fund's use of higher likely. The fund's use of daily or 0 DTE call option provides a higher likelihood of participating more closely in the capital performance of the underlying security as compared to covered call strategy with longer time horizons. All right, pretty big statement right there. However, it is important to note this sale of the call options will generate. All right, if the value of the SPY, all right, I don't need to know that. To implement the fund's investment strategies, beginning of each trading, sell. Okay, so they sell out of the money, same day call expiration on the SPY, SPX, or XSP, anywhere from 0, so they could do at the money, to 5% out of the money. Again, anything further than 5, they don't want to do anything more than 5 anyway for one day. The strike option, okay, whatever. Okay, at the expiration in the money. At the expiration date, if the option is in the money, the buyer will typically exercise the option, benefiting from the ability to purchase the blah, 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 blah. If the option is out of the money, okay, blah, blah. The trade-off. All right, let's keep going. Covered calls. Again, I'm just trying to look for something that may be of value that we do not know. Notional value, yeah, plus or minus more than 5%. The fund may reallocate its portfolio at the end of each trading day. Okay, good to know. The long component of the strategy consists of investments in the SPY. SPY is not actively managed and holds a portfolio of common stocks that are included in S&P index. I wonder if the SPY can be used as collateral to sell calls on the SPX, right? Maybe. The fund will also hold short-term U.S. Treasuries as collateral in connection with the fund's option strategy to generate income. Okay, nothing there really. Let me catch up on the comments. I know you guys are reading this with me. Yeah, I didn't see it, but it's all right. I believe you, Steele. Just notice that TDAC most likely will break its all-time low today. Should reach out to Brad, the income architect. He has been in TappAlpha since it came out. He used to track the trades. Yeah, I mean, again, with these funds, we can look at the past and judge them by the past, which is what we have and all we have. But it's really about, what are you doing for me now, right? So let's keep going. Income generation, theta decay. But yeah, I talked to Brad and a couple other YouTubers pretty frequently. Try to keep in touch. Let's see. All right, this is just about that. I'm not gonna. This is about the risk. I'm gonna have to scroll faster here. Yes, the risk is important to read, but I'm not reading that to you guys. You guys are gonna have to read that yourselves. Investment advisor, Tapp Finance is the advisor. Oh, look at that. Tuttle Capital is the sub-advisor. Did you know? And did you know? Good job, Tuttle. Good job. All right, let's keep going. Funds distributions will be taxed as ordinary income or capital gain. Okay, interesting. So that sucks, right? But again, we can look at the annual if we can find it, but okay. All right. We already went too far. So this is on the Qs. This is the TDAC one. This actually has a lesser expense ratio, 0.68%. So that's a little interesting. But yeah, man. So that's pretty much it with the prospectus. Yeah, just as brother said, past performance does not demonstrate future results. Right? That's something like a disclaimer that these funds usually say. So if we look at annual financial statements, good Lord, that's small. All right. Realized and unrealized. Yeah, again, there's 24 pages, actually not that bad. Let's see if I can quickly find it. All right, yeah. I know you guys can't see this. Let's see, value, paid in capital, earnings, net asset, shares outstanding. Paid in capital. Almost all of it? Let's keep looking. Distribution. All right, here you go. Return of capital. Here's distributions to shareholders. From earnings, 36,000. Return of capital, 174,000. Okay. So, the question is, though, how is this taxed? Is it taxed via the 60/40, or is it taxed as regular income? I guess that's the question, which I don't know the answer to. What else? What else? I mean, maybe if they update the holdings during the day, if I remember, I'll pull it up and see what they're selling options on. But again, I don't know. We'll have to see. All right, so that's TSPY, right? And just out of curiosity, I want to see, did these other ones launch TSPY Lift ETF? Okay, so they're going to do leverage, like we all need more leverage in our lives. 130% leverage. Okay, so this has been out since January 7th this year. This is for people who just want more. You know, they just want a little more income, and it pays weekly. Look at that. So they satisfied higher distributions and weekly payers in one additional ETF. You know, these TappAlpha people are pretty smart, you know, because they don't have many funds and they're sticking with the indexes, which is good. But coffee time. Oh man, Bruce, come on. You know, we need some good news here. Freaking Bitcoin. It's because I bought some, you know, never fails. I can't stop buying. Yes, the Qs did better S&P last year, but the opposite so far this year. All right, all right. It means they're using your money to make money and giving yours back and keeping the expense fees. Yeah, in a lot of cases that could be true, but it depends on, you know, they could have capital appreciation within the SPY, right? Because again, they hold the SPY. It's just they're just holding it. So as the SPY goes up, you know, you're getting that capital appreciation. But if they're paying you, you know, distributions and not taking the capital gains from the underlying, obviously it could be classified as return of capital, but your capital could stay flat or actually go up too. Leverages weekly pairs. Yep. TSPY fact sheet. Look at this. You know, Steele is like, he's doing the work for me. Should we hire him? I know I already had it up. Where does it say that? Is that like on the bottom somewhere? Go up. Oh, estimated, yeah. Estimated. I mean, that's good, I guess, estimated at 100%. But again, for whatever is not return of capital, I want it to be 60-40. You know what I mean? So that I'll have to find out. Okay. Now, I guess to the point of return of capital, getting your own money back, and performance overall, you know, here is, they've been out since when would we say? September, August of 24. So you could see when it comes to total return, the TSPY versus the SPY, it's really, you know, they're really moving with each other one to one. You know, not exact, of course, but it's really, you know, it's mimicking. It's not falling behind. But again, this is total return. Okay. This is drip. This is reinvesting. So, you know, for me, I don't want to reinvest. I never drip. I don't reinvest my dividends. I'm using my freaking dividends for income. Or else why am I buying an income stock, right? So what I care about is price change. How is the price holding up? So if we look here, okay, so TSPY over since launch, they have been up 1.78%, right? And the SPY has been up 25. Again, this is without their distributions considered, which I know it's not a fair comparison, but I only wanted to do this to see, you know, is it staying capital flat? And it is from inception, which is good. In fact, from down here, it's up a lot from April. Well, again, what's not up from April, but it's just good to see that, okay, if I bought at inception, my capital would have remained the same and I would have received, you know, distributions on a monthly basis. So if we pull up some of their competitors, XDTE, who else? WDTE. Who else? SDTY. I don't know if WDTE does 0 DTEs though, but this is just, you know, price change. You can see that TSPY just by price changes at the top. Total return may change though. Yeah, if we look at total return, let me make sure. Okay. Pretty close. Like they're all competitive. It's SPY number 1, TSPY number 2, WDTE number 3, XDTE number 4, and then SDTY number 5. So again, some of these funds, they do pay a higher distribution. Some of these funds pay a lesser distribution, but they're all, again, total return wise, it's fine. But again, if you're just buying the fund and not reinvesting the dividends, your capital is going to go down, right? On most of these, some more than others. So if that matters to you, then you might just look, and compare the stock price change, right? So if you look at like 1 year, let's see, do they have the 1 year? Yeah, 1 year. Yeah, a lot of these are down. All of them are down except the SPY. But again, you can see that TSPY kind of holds up better. But again, they do pay a lesser distribution. You go to the 6 month, yeah, everything's negative except SPY and TSPY. 3 month, everything's negative, period. But again, has not been a great 3 months. Roundtail Zero, he had similar language when they first started, yeah. Return of capital's legal definition means exactly that, returning your capital. Yeah, I mean, again, it is what it is, but it doesn't mean the stock, your individual holding could go up in value, and you could still get paid return of capital. Again, FEPI's a bigger example of this, right? Because they hold the funds. They're not going to take capital appreciation on the underlying unless via reallocation. But again, it's just deferred tax treatment anyway. It's not permanent. So return of capital is great, but eventually, when your taxable cost basis goes to zero, you're going to have to pay up. But the good part about that is supposedly when your taxable cost basis is zero, the future return of capital payments should be taxed as capital gains. Hopefully. That's what I read at least. All right. I think that's it, right? Is that enough? What's Bitcoin doing? It's still going down? What's my portfolio doing? Still going down? What a beautiful day, right? Actually, let's pull up TSPY in the pre-market. Let's see what we're doing here. A green. Is it S&P? S&P's down though. S&P's down point. Everything's down, man. This sucks. God. Welcome back. Let me just close my laptop now, not even look at the stocks. Or buy the dip, right? Buy the dip. So what do you guys think of TSPY? Is this another fund you're not buying, or is this a fund that you like? Again, they pay 14%, much less than what you guys are used to. But from launch, they are able to say they are up in share price. I don't know. Maybe they launched at 25, so maybe they're down 13 cents. But how much did they pay from inception? I don't know. I didn't calculate that, but I'm sure they're not at house money. They could be close, right? Are they paying 30 cents a pop once a month? Yeah, 30 cents. So, all right. Well, anyway, it'll take them like 8 years maybe to pay you back, I think. All right, guys. As always, this is not financial advice. I am not a financial advisor, and this video is for fun and entertainment. So hopefully I had fun. Hopefully you're entertained. If not, then I don't know what to tell you. Again, this was like a last minute video because the market was closed yesterday, so I couldn't do my my rec shares video because I wait for the distribution. So I'll do that one tomorrow. But this one I've been waiting to cover because I have to think about building like someone at the bottom, someone instead of cash, a small, tiny, little baby position that's going to pay me income. You know, is it TSPY? Is it SDTY? Is it XDTE? Who pays? You know, who's the best for tax? You know, tax treatment wise, who's the best performer? You know, we got to look at all these things combined, right? Let's see what you guys are saying. XPay and PDI. So XPay is all return of capital. So if you think about XPay, they don't even do options, right? They buy the S&P and they pay you. And since they're not making money because they're not selling the S&P, it's all return of capital, right? But if they pay you, say, 12%, 15%, I forget what it is, and the S&P does not perform well, then yeah, that's gonna suck. But if the S&P actually performs well, you know, XPay could be a good tool. You know, it's if you think about it as an investment product, you know, for them earning money. I don't know what the expense ratio is, but last time I looked at it, I believe it was high. And to me, I didn't think it should be high because they're not doing anything, right? Yeah, they made the ETF. They're not doing options. They're just buying it and paying you, right? A robot could do that, right? I don't know. The thought is good though, right? The thought is good. And, you know, the fact that they're paying out you more is good, but they're not doing anything else. At least do like way out of the money long dated calls or something to earn a little more premium. You know, but I don't know. I'm not a fan of XPay. Sorry. Wolf is moving into index ETFs because I want more. Yeah, I don't blame you, man. It's just rough out there. Warren Buffett was right. Most funds can't. Yeah, no, that's for sure. GPIX for week 1 dividends, XPay for week 2. Yeah, GPI, I think they have an S&P one too. That's probably a good one to review. TDAC, maybe week 3, SPY week 4. I think XPay, yeah, 20%. Yeah, it's not gonna hold up. There's no way. S&P is not gonna average 20%. But again, I don't think people care. I think the people, well, you hope that the people investing in it, they kind of know it's going to go down in value, right? I mean, I could pull it up. XPay pays what, 20? Yeah, this pays 14, so it's not really a good example. So if we do max, so again, XPay, yeah, I mean, overall total return wise, wow, it's beating the SPY. That's interesting. Look at that. Again, that's total return. So if we look at price return, we're going to see a different story. Yeah, because they pay out a little more, so your price is going to go down in value. So if that matters to you, because you're only living off the income, you're not reinvesting it, then again, you have to find the balance. That's the trick. You know, these have been out forever, right? Like 3 years now. We've had a good sample. We have so many options that we really have no one to blame but ourselves in choosing the right one. Everyone's story is different. Everyone's situation is different. So, you know, is there a fun for everyone? I'd like to think so. But again, you just have to pick what works for you, man. Yeah, XPay, it's going to pay 100% return of capital. TSPY pays week 1. Trading, investing are different things. XPay RC will lower your cost basis the following year and not taxed dividends. Yeah, again, it's just deferred. It's deferred. But you know, by the time your taxable cost basis is zero, then all right. DPC Dad, haven't seen you in a while. Easier to buy good quality dividend stocks and be patient and let them do the work to own something that goes down 50% and has to go up 100%. Come back, not worth it. Yeah, I think he's referencing dividend growth investing, which is, you know, it's not a bad plan, but again, it's the long game, and you need a lot of money for that. So, but you know, again, that's why you have to find the fund that can maintain its capital, right? Maintain your capital and pay out the distribution. I mean, maybe it doesn't. Maybe you're going to drip 50% in, so maybe you don't have to maintain the full capital. You're just looking for a decent dividend. Again, like I said, it all depends on the person. XPay good in a Roth IRA? I don't think so, man. I think it's the opposite. XPay would only be good in a taxable, because the whole point of it is the ROC treatment, you know, because the Roth, none of it's taxed anyway, right? So why do you care about taxes? Ninja watching. Oh, okay. He's hiding. He's secret. Good to hear. Good to see you. Type a little more often. All right. I got to wrap it up. I got to get a moving here. But we said not financial advice. But yeah, if you guys enjoy this content, please hit the like button. If you want me to review any other funds on the other extra random days, please let me know in the comments down below. Outside of that, I'm just going to get to the keywords. So if you made it this far in the video and you want to prove it, you gotta say the keyword. I don't even know if X is working, by the way, because it said X Live may not work. I don't know. So I think we're just on YouTube, but either way, keyword today is, yeah, actually it's a question. What is the best S&P 500 income fund? All right. What is the best S&P 500 income fund? That's the keyword. So you got to answer that question. Then that way I know you made it this far in the video. All right, guys, I'm out of here. I'll talk to you tomorrow. Sound good? All right. Have a good one. Later.